Hi, everyone. I'm Maggie Lake, talking markets today with Dale Pinkert, coach at TradeGateHub. Hi there, Dale. It's so good to be back
Maggie,
on air with you.
there are thousands of people that are so glad to see you back talking to analysts and bringing your personality into the business again. We all missed you, and I hope your channel grows like a mushroom, which is exponentially.
Thank you so much, Dale. We know they're here to see and hear you and all the smart people I talk to, but I appreciate the fact that I can be a conduit for sure. And gosh, what a time to be talking markets, right? I mean, we had such an ugly looking week, worst performance for stocks in well over a year. And it seemed like a lot of the negative, or it seems like a lot of the negative sentiment is really centered in the tech sector. It's not limited to that. There's a lot going on, but that seems like it's sort of the epicenter of what's going on. What are you seeing when it comes to tech stocks, and what are you watching?
Okay, well, from our past conversations that I always felt that the Mag 7 weren't going to be so magnificent, and Nvidia was really the poster child. And what's interesting about Nvidia is Nvidia topped in June. And then when the NASDAQ 100 made a new high in July, a key reversal, which it still hasn't taken out, Nvidia was posting its a lower high.
Mm.
And on this recent rebound after the August flash crash, if you want to call it that, Nvidia again rallied with the market and put in its second lower high. So, I mean, why don't we just take a look at it? A picture speaks a thousand words.
Yeah,
And,
Dale's going to
and
share his screen. We're all pushing the buttons ourselves here now, so
okay.
you're gonna have to bear with us while we
All
do
right.
that.
So
There
that's
we go.
gold. We don't want to start
No,
with
we don't
gold.
want gold.
So
We want. What are you going
we
to put up?
want,
Are you going to put up Nasdaq, or are you going to look at
I'm going to put
Nvidia?
up NVIDIA so
Okay,
people
put up
could see what
Nvidia.
I was talking about. So
Yeah.
here was a high. This was actually, excuse me, it was in June. All right. And the which was a month earlier than the July high that we had in NASDAQ, right? So here was NASDAQ making a new high in July while NVIDIA failed on that.
Mm.
Okay, so this was where NVIDIA topped. And even with this blow off in NASDAQ, NVIDIA could not make a new high. That was a tell to me that there's something going on here because as much as it was loved and as bullish as the market was, what's wrong with NVIDIA not participating? It led the whole advance. So when
Mm.
something leads the whole advance and then begins to stop making new highs with the indexes, that should be a sign to you. You know, the markets will talk to you if you listen.
This is why
And
I think it's so. This is why we love getting your insight, Dale. And I think this is really important because so many of us hear about the fundamental story around NVIDIA all the time, right? AI
yeah,
is going to eat the world. NVIDIA is at the center of that. It's a really compelling, fundamental, and long term story. But you have if you pull the time horizon closer, you do have all these things that are happening from a technical perspective. And when you talk about the chart like that, it seems so obvious that it was ready to turn, but so many people got pulled into that. They're just conditioned to buy the dip.
and they still are. And they'll be trying it. In fact, let's go to something like one of the averages. So I was involved in, uh, I host a show called Face, and I was talking to one of the guys who's a very good trader that earlier when we were just before the number, we were down just a little bit here, but under the key 5,500 level. And he said to me, well, Dale, it doesn't look bad. It's just 38% back of this recent advance. And, that's great, but, I need more than a fib number. And I'll tell you why. Because I've done this before and don't do this. So you're bullish and you go, well, I'll buy it at 38%. Oh, it kept going. Well, I'll add at 50%. Maybe I should buy more at 61.8. How about 78.6? How about 88.2? So a fib number is a reason to watch a level. It's not a reason to act on a level.
Yeah, he's talking
You
about
have to see how,
Fibonacci. It's a common,
yeah,
term used in technical analysis. And we're talking about the S&P 500 here, right, Dale? For those
right.
who are listening on pod.
And what's interesting about this week, Maggie, you and I were talking about it before we went on air. Look, I'll admit it, even though I'm long SQQ from NASDAQ, and I did it. Okay. So I bought SQQ when we were halfway back, and then I did it at the 61.8, and I didn't have the courage to do it at 78.6, but I'm long SQQ. I'm up pretty good. But this week in the S&Ps, I came in, here was Friday's close, and I'm saying, well, wow, we're only about 40 handles away from new all-time highs.
Mm.
So if I was thinking that, and I was looking to, maybe take a shot because it could have been a three drive to a top formation. So Monday night we were steady, a little bit lower, but then you wake up in the States Tuesday morning and you're 33 handles lower. I think a lot of people are stuck. The bounces off the first break from Tuesday were not bounces. They were holding, but they weren't bounces.
Mm.
And once we took out this 55 level, it measured this was 150 points. So 53.50 would be the target off this formation. We'll see if the Bulls can get it together at that level.
So if I
I'm
if
not
I'm going to
sure.
try to translate that, and if I'm understanding you correctly, because the bounces in tech have been so powerful, and equities in general, when you see a big kind of puke like we did in the summer, people are very tempted to get in and try to find the bottom, right? Because it's been very profitable to do that. They've bounced off it. It's been very strong when the rebounds come, especially when you're talking about a stock like Nvidia. It's been a fantastic opportunity. So it sounds like a lot of people got pulled into that again when we had the rebound. I think we were talking about it as a
Yeah.
bull trap, on Wednesday. So that happened. And then now when you see the market deteriorating like this, there are people who have not gotten out of those positions, who are looking for an opportunity, right? So it sounds like that's going to keep some pretty steady selling pressure every time the market tries to recover.
Okay. Well, I mean, here's another market tell. Um, Nasdaq led the advance. It way outperformed the S&P and the Russell and everything. And people were bearish all the way up, and I tried it a few times because it was so concentrated only in the Mag 7.
Mm.
So there was no breadth, right? So people go, well, the market could be vulnerable. And then we had that big day in the Russell, and the rotation was this day. And this was a key reversal. Um, so after this happened, S&Ps were almost making new highs,
Mm.
right? I just showed that picture.
Mm-hmm.
Here we are. I thought we'd make new highs right here. But NASDAQ was just a retrace.
Mm.
So there's another market message. NASDAQ led the whole way up. Why all of a sudden is it displaying weakness compared to the S&Ps? So NASDAQ, I'm open to, I'm sure they're going to try and hold it at the 200-day. They may, but I think there's a shot for 16,000. If you just have like a quality from here, that would take you to about 17,000.
Oof,
But we
that's a
could get an
long way from
overshoot.
where we are now, Dale.
Yeah, that's kind of a little bit of a mini crash. So people that were waiting for October to get out of the market because they have fear of the elections, it didn't accommodate them here, and it's not going to accommodate them here. So I think that we're down um, probably into at least the equinox, another couple weeks, and maybe even longer. And then we get a rally into the election from sharply lower levels. That's my call on equities.
So it's tough because I know you are so focused on the short term. I imagine that we're going to get some questions. For people who didn't get out, if you're not a trader and you're a retail person, you don't have a 10-year time horizon, but you've got some time. Do you try? I mean, it's going to be awfully painful. Do you just avert your eyes and just say, you know what, just don't look right now. You didn't get out before. You're just going to be caught up in this wave of selling down. How do you respond to people who are kind of in that situation? Because I can imagine there's an awful lot of people who are holding Nvidia and are scared.
Well, Charlie Bellow showed a chart, and U.S. households has never been longer stocks
Mm,
in history than they are now. And part of the article was how people were just so, tickled with how they, really become millionaires over the last couple years from the market. So, they have plenty to give back. Normally, and I've been through a few cycles, what people do is when you enter a bear market, their solution for what's going on in the market is just not to open the statements when they
mm,
come in the mail or look or even look. They used to be, it used to be paper, right? So
yeah,
people wouldn't open, they'd get their statements and they just wouldn't look at them. And you
yeah,
know what? It served them.
yeah,
Maybe there's going to be a great buying opportunity after this flush, and there's some panic. You know, I think this is something that also made me nervous about the structure of the market was what the VIX did, Maggie.
hmm,
A 10% correction in the S&Ps, which is what we had into the August low, did not justify a 60 VIX,
yeah,
maybe a 30. So this is telling me that there's some, I would say dysfunction. They didn't even make a market in options when it was doing this.
yeah.
So I've traded my last VIX option. It's just another story, another war story I have to tell people because I was long VIX calls and they were the 20s. And when we were trading up here, they didn't give you more than $4 for them. And I paid two. And they should have been at one time worth $20,
Wow.
$30. So, right. And the vehicle was dysfunctional. So all these guys that were short volatility, that was another reason I thought the VIX would go. There are actually ETFs that have been making a fortune selling vol for years, and
Hmm.
people buy these ETFs. So it was a one-sided trade, sell vol. And you know what? If they did it up here and they were able to get executed on an order, they did pretty well again. But it looks like we're going to have a little bit of an echo retracement here. I don't know if we're going to take that out, but
How
this is just a sign of
sign that there's
market
some
like
fragility.
fragility, a
Yeah.
structure, liquidity, everyone on one side of the boat, and everyone trying to rush through the exit at the same time.
And we've been talking about that. I mean, everyone kind of understood that was this setup, but there doesn't seem to be much that anyone could do about it. You know, everyone was talking about it, warning about it. When we're looking at Nvidia, you don't have to put the chart up just yet, but is there a level that you think it's really important for that stock to hold?
Yeah, 90.
90.
At the August low, it may dig its heels in here. I know some people wanted to buy at 105. It held up. It didn't keep making new lows all day today, but it's a bubble, and it's not that AI isn't valid. It scares the heck out of me actually. AI. You know, I'm actually a hologram today.
Maybe we both are, Dale. Maybe we both are.
anyway, anyway, but just because something's going to be great or powerful doesn't mean that the shares underneath it um, can't be in bubble territory. I mean, tulips are beautiful, and they were still beautiful after tulip mania crashed, but they weren't worth what people were willing to pay for them at one time.
That's right. That's for, if you don't know what that means, you can go look that up in the
Yeah,
history of finance. It's very
yeah.
famous for being one of the original bubbles. So we have some people asking about, of course, the dollar. For before we get to that, though, I just want to, because this is all related. We just talked about sort of tech and the sentiment. We're also really focused on the U.S. economy. We had a U.S. jobs report that came in a little lighter than expected. It was a lot of downward revisions. Unemployment. There's always a little bit of something for everyone in them, but definitely signaling some softness in the US economy. Did it change anything for you today, the jobs report?
I think it may have changed for some people because the headline numbers were okay. It was the revisions that kind of
Mm,
freaked people out. But I think it discouraged people thinking the Fed's going to go 50 basis points when they meet. And I think that was a disappointment for the market. This market wants the Fed put back, and now more than ever after this week. So a quarter isn't going to do much. In fact, a half isn't going to do much. You'll get a market reaction. We're still feeling the effects of the tightening. Okay, it takes so much time to filter through the system that even a half a point cut, you may get a rally in the market because that gives people confidence, but economically, it's not going to have any impact for quite some time. Just like it took the tightening cycle quite some time for inflationary pressures to wane, it would take quite some time for Fed stimulus and easing of rates to feed through to the economy and help it. I mean, at least 6 months.
yeah. And there's the real economy and then the financial economy, which is what you're talking about, who really want that. There's a debate. Does the real economy need it? There's some interesting arguments on both sides. The markets really want it, though,
The
especially if you
markets
keep
want
seeing
that
this.
Fed put definitely. And you know what? The economy, a good part of the economy needs more than interest rate relief. They need all kinds of relief. So,
Yeah.
the real economy also has issues. We've been in a manufacturing recession for a while. And you know what? We're not planet Earth, America.
Yeah.
There are other parts. Europe's in recession. Germany's reporting bad numbers. Okay. China's still having problems. They haven't used their bazookas. They have issues. This is a global recession that we're heading into. And I don't know who's going to pull us out of it. Last time China was still growing during the Great Recession, and they helped pull us out of that recession in '08. Besides fiscal and monetary stimulus, there was still a growth engine in the world. And now it seems like all the, if you use an engine, it's like every piston is frozen
Mm.
on the engine. So, it's strictly going to be monetary stimulus. And, I think the repercussions of that's going to be what's already happening. They brought up the dollar, the viewers.
Yep, they
Uh,
want to know about
yeah, so
DXY. What are
we,
you seeing on it? And
we've
interest rate
embarked.
differentials matter here, right? All of the stuff you're talking about, global growth really matters to this currency
I
story.
remember when I was bearish when the Dixie was, I don't know, 105, 106, and people said, well, Dale, aren't you concerned about the political instability in the UK? And then France was having issues, and there were issues in Japan. We know what happened to the yen. I said, there isn't a country on the planet that has more political instability than America right now.
Hmm.
Okay, so that's part of it too. And we do have people that have been trying to dethrone the dollar, de-dollarize it, and then you have former President Trump and J.D. Vance talking the dollar down, which is making me nervous. That's why I think we're in this reaction period because now I have company on the bear side of the dollar. So I don't know how they would do it from the executive branch, how they could bring the dollar down. I'm not sure of the mechanics, but
They may
um,
not be sure of the mechanics.
that's when you want to be long, you want to be long commodities and
Mhm.
exporters because it's going to make us more competitive, and it's probably going to worsen the situation in Europe because they're a big export economy, and if they're having trouble now, what kind of trouble are they going to have with the euro at 115 and 120?
Yeah.
At the margins, it's going to make things exacerbate things in Europe.
It's always complicated when there's a race to the bottom, Dale. We've sort of seen this play out before when you have competitive devaluations and Boy, it's a hot mess all around. So if we're looking at the dollar,
Okay,
before
let
we
me
get to
pull
the
it up.
election, that becomes an issue. Of course, we have to see who wins. But right now, what are you seeing as the setup for the dollar? You can walk us through some of your crosses.
Okay, so here's the Dixie. All right. Uh, Viewers know I was pretty bearish. 103 was a big breakdown. I'm looking for under par. Back here, it was a big call under par. Now we've tested it a couple times. There's one thing that stood out to me on the big crash we had in August, the August low that we had. The market was getting crushed, gold was getting crushed, and the only things that were holding up and performing were bonds,
Mm,
gold, and the euro was higher.
mm,
So, that's kind of like burnt an impression in my mind that things are shifting, and a lower dollar may not be risk on. Bad news could be bad news again. That's what you're seeing in the market right now. And the dollar, if you look at it now from a bigger picture, I'm looking to sell a rally next week for you action junkies. We get a rally back to 102 and a half or so. I'm going to short the dollar. I think the euro is a decent buy around 110, 109.50. Cable outperformed. I'd like a chance to be able to buy it maybe in the low 130s. Aussie's taking it on the chin because it's more vulnerable to risk off, but I'll be looking for a place to buy Aussie. Canada peaked, but I think we could get a bear market rally maybe back towards 37. And the Dixie, after we go here, I'm looking for a move under par, probably to 97, and then another rally. So it's not going to be a crash like a lot of people are worried about.
mm.
And look at what we're holding here. Okay, look at this par level. So here's par. Look at the confluence. So my target was par and a half, and it was pretty good for this move. Underneath this level, longer term, you can make a case for 88, and that would be just taking um, the width of the of from here 114 to here, breakdown, you know, 1200, 1400, could take you 88, 86. Shorter term, it could be just something like, from 100 to 107, 95, 94. But remember how we used to say, someone you interviewed, if you get the dollar right, you could get the rest of the market right.
Peter Brandt. That's what Peter
Okay.
Brandt always
All right.
says.
So, you would think that this is going to be bullish the world, and it may be because a weaker dollar could, not will definitely, I think, be supportive of metals and commodities and stocks. We'll see, because maybe people are going to, if they want to buy stocks, they're going to want to buy stocks in an appreciating currency like maybe Europe
Mm,
or the UK or emerging markets like Brazil. A lot of the emerging markets that were hurt from a strong dollar all this time start will get relief on a move like this. So it's time to think internationally
mm,
when it comes to stock investing, and it also something I talked about. Everything we own in America is priced in dollars. So if I think there's another 10, 15% to the downside, and longer term it could be worse, um, you have to find a hedge for your assets that are priced in dollars, because even if they stay the same but the dollar loses 10%, so does your investment based on the
yeah.
dollar
So what is
losing.
that? What do you think that hedge is? Obviously, we have a lot of people asking about metals and gold and silver here.
I think gold is. I think gold's in a little bit of a precarious spot right here. Um, and gold, the physical metals once again are acting much better than the miners. But gold, just like everything else, if we have continued liquidation, you just sell what you have.
Mm-hmm.
Okay. What you saw today and in early August is what happens during a liquidity crisis when there are margin calls where people just have to raise cash and they'll sell the kitchen sink if they have to. So that's why and it's not like the dollar was up big, you know, there's a little bounce. A day like this, Euro's only down 22, and it's off its highs, but a day like this with S&Ps down almost 100 handles, in the old days when the dollar was in a bull market, you would have seen Euro down well over 100 pips.
Mm. Uh, I know you're also looking at grains and nat gas, and I wanted to squeeze them in because obviously it's wonderful having you here because you talk about everything. I feel like the conversation's been everywhere, including the ones I've been having, so centered on tech because of what's going on. What are you looking at for grains? Let's start
Well,
there.
I saw a heat map, and a heat map shows, all the different sectors and instruments, and mainly on Tuesday, everything was red, like today. But on Tuesday, I noticed with crude breaking down, and it's definitely broken down. Here's the bigger picture of it. Um, I was talking, and I noticed that while crude was breaking down, I said, don't ignore natural gas because this was Tuesday in natural gas.
Mm.
Nice little update.
Mm-hmm.
Well off the lows, not getting creamed like everything else, right? And when markets, again, if you listen, the markets will speak to you. So this was speaking to me. In all the carnage, the Widowmaker was able to close higher on the day.
Mm.
And the same thing happened in the grain complex. Wheat and natural gas were the only green, or
Interesting.
mainly the only green on the screen. And I think you have to buy this break in grains. Here's wheat. I like it. Maybe you buy a pullback. We get through this level. We could see a nice rally. Corn looks okay too. We're getting a pullback. They were not immune from today's sell-off, beans either, but we may not make new lows. So I like wheat, and I think natural gas looks pretty good. And I just want to caution people as far as where to buy the gold and buy the silver. I'm going to time that off the dollar up around. I want to see where they're at if and when the dollar trades around 102.50. So I'll be looking at what levels we're going to be at then. And, this looks like this has been pretty big support, this 2470 level. So if we take that out, we'll be testing 2440. I think the impossible thought is that if we really get going, rolling to the downside and have a liquidity crisis, why can't gold come back to its 200-day moving average at
Hmm.
22 and a half? What makes me think,
Is that so interesting? So, because people are always looking for things that are not correlated, and the hope is always that if everything's getting killed, gold's the safe haven. But you're worried. Is it because of the idea you sell your winners, you raise money where you have to?
right, and same with GDX. So
Mm.
gold's on the verge of making new highs, and people that follow me know about how I look for three drives to a top, and the GDX wasn't even close to making new highs this week, and we're on the
Mm.
verge of rolling over. I'm going to be very curious I'm going to be interested in looking at the long side of miners. People are pretty fed up, and I can't blame them. Look at the give back we have. Now you
Mm.
remember when we talked in the spring, I liked them. I got
Mm-hmm.
out early, and they were home run balls. That was a home run ball.
Mm. So
This
you're
was a
you're
home run ball.
interested because they look beat up and people are frustrated and are leaving them for dead. So they look
Yeah,
kind of interesting, but gold is making you nervous because it's
Yeah,
sort of
well,
making
these
lower
should
highs.
lead. These should lead.
Mm,
So, I'm going to be looking at the miners when you guys see 32 to 31.13, that's 61.8. No, I'm going to be looking at miners to see, what's its structure, our size structure. But I think that this could be a pretty good buying opportunity in the miners. So I'm watching that. And if, I thought we may as well go back to, you and I were talking about TLT
yeah.
when I turned bullish quite some time ago.
Hmm.
Actually looked for 86. That was a low. We're on the verge of breaking out in the bond market. Okay, so I talked to you here. I talked to you here. And looks like 109 is pretty doable.
Wow.
105, 109. And perhaps this is,
And we're at
uh,
what, 99 now? That's a
yeah,
big move.
yeah, but you just draw a straight line across par,
Hmm.
and they tried to break out today. So this tells me there could be some more risk off. I mean, the bonds were no trip to Hollywood today. I mean, that's a weekly, but the daily didn't do anything fantastic considering how much damage and carnage there was in the market, but it still looks good. We never retraced back to 94. This is where the bonds turn bad if we ever get back under 94.
Mm.
That level has held up. But if we're going to 109, it makes me think there's probably more left, more risk off left, and it's going to be a flight to safety. So the bonds are acting like flight to safety a little bit more than they used to. Um, they don't look as bad as there's TLT and there's S&P.
Yeah.
Which one would you rather own?
Yeah.
Which chart looks better? I'll be like an
I'll
optometrist.
tell you. I'll tell you for those who are listening, because now we're on Spotify too.
Okay.
You don't want to. That S&P chart is scary, and the bond one looks like there's a lot of opportunity. Of course, we
Yeah.
are not giving financial advice. We are merely sharing research and thoughts.
Yeah.
Everyone's got to make
Right.
their own financial decision. You know that disclaimer. By the way, we did a little poll, and a lot of people agree with you, Dal.
Oh,
79% bearish the U.S. dollar, only
I, uh,
21% bullish.
I'm gonna have to reverse Monday.
Everyone's
Anyway,
catching up to you. Dale is the original. He sees things early, so
please,
he's.
please don't keep company. Anyway, so here's how I play. I'm playing Nasdaq, and I talked to one of your buddies, Peter Brandt.
Mm-hmm.
Okay, and Peter has a belief that you have to consider both sides of the case, right? The bull case, the bear case, because that keeps your mind open
Mm-hmm.
to things that might be changing. So here's the bull case. In SQQ is an inverse ETF on NASDAQ 100 three times. So, it's not for the faint of heart. And I even buy options on this. So, you know, um,
We're talking to a pro
call
here.
me, call me Kenny Rogers. Anyway, so the bull case is uh, just like the NASDAQ, we did not make new lows. This should have made new lows. Plus, there's decay in these instruments. It basically held 78.6 back, just like the NASDAQ did.
Mm-hmm.
And if we break out over this 200-day moving average, I can make a case for 15.
Mm.
Okay. The bear case is this is just another bounce, and the market's going to recover and will turn early next week and flush to new lows. The first sign that that's going to happen, this was the big area once we got back over 850. So under 850 tells you 850, see this? This is why, this is when the market started accelerating. This was
Mm-hmm.
Tuesday, and then they couldn't sell them off. And then now we're starting to enter an acceleration phase. So we'll see. As you can tell, things can change in a New York minute. Play that song every weekend by Don Henley so that you're prepared. Because one of the best market timers in history was W.D. Gann, right? So if W.D. Gann had an expression, and here's a guy who called a would call the market, not just the price, but when it was going to get there.
Mm,
Because time was more important to him than price. But you know what his maxim was? And here's an accurate, probably had a pretty good hit rate. Better than mine, better than most people who are right maybe half the time. If you don't learn how to change your mind, you won't have any change left. That's W.D. Gann, one of the best market timers in history. So learn how to change your mind
some
and be
wise advice to
flexible.
leave us with on the weekend, Dale. But it's so important because people get married to their narrative, and it's been a
One
really
thing
expensive one,
have
especially with
not
tech.
changed my mind about is that you are a great anchor. It's fun to be with you, to smile with you and talk markets and to share my ideas with
Same
your
here.
network. And I want you, Maggie, to write this down. The
Yeah.
cream always rises to the top. And
I've
you're the
actually
cream,
heard that
Maggie.
before, Dal. I
You're the
I so
cream.
appreciate it. You're so kind, and everyone's always happy to get some sage advice for you because nobody does it like you do. You bring a wealth of experience to these conversations,
I'm
and we
glad I
need it
learned a few
now.
things. Yeah,
Yeah, we need it now. We need it
yeah.
now. Great to end the week with you, Dal. Thank
I
you
thought
so much.
I mean, you brought up a song. I'm not going to do Reunited. But I know a lot of people are worried with what's going on. I'm worried too. I'm worried
Yeah.
about, what's going to happen in November, what's happening in Ukraine, I worry about plenty of things.
Mm.
But I thought I'd leave it with a song that's kind of like my tagline. I always say, don't just count your pips, count your blessings. So how about something from Perry Como?
Let's do it. Give it to us.
If you're worried and you can't sleep, just count your blessings instead of sheep, and you'll fall asleep counting your blessings.
All right. That is
Uh-huh.
a beautiful
Uh,
sentiment to leave us off with.
yeah.
A nod to
All right,
Perry
Maggie.
Como.
All
There are going to be
right.
some people that need to go look that up, but that's okay. That's what we're here for. Always educating. I
Thanks,
know who he
Maggie.
is, though, Dale. I know who he
Uh,
is.
Thanks.
Oh,
Don't
we love
worry,
you,
everybody.
Dale.
Don't worry. Be happy.
Don't worry, be happy.
All
Exactly.
right.
Dale, thank you so much,
You're
as
welcome,
always. You're
Maggie.
just amazing. Thanks to all of you for tuning in. Make sure you subscribe, hit the like button. As we said, we're on Spotify now, Maggie Lake Talking Markets, and you get on our email list so we can keep you up to date with everything we're doing because we have some fun plans ahead. Thanks. Great way to end the week. Thank you so much, Dale. Thanks,
All
everybody.
right,
Enjoy
Maggie.
yourselves out there. Take care and good luck.
See ya.